What's going on? I mean, the market really trading sideways, but at least in the positive for a change. Why is that?
There's a lot of confusion actually going on at the market. One, because of what's happening to the Kenyan shilling, having importers and exporters actually, wondering what's going to happen to their gains. With the lack of direction from the Ministry of Finance and Central Bank, we actually seen that a lot of foreigners actually exiting from major key stocks like Kenya Commercial Bank, Safaricom, East African breweries. So we've seen that a lot of key fundamentals actually being ignored, and there's a lot of sentiment that's actually driving exit strategies from the market. But also we're seeing that local investors actually don't know what's the way forward, because at the end of the day, the deeper factors actually affecting the market, and one of them is actually politics, and especially the aspect of the implementation of a new constitution, because you're actually trying to see that it's now coming actually into force, and many are wondering what's going to happen next. Also, at the end of the day, rising inflation, rising high cost of living, making people, come out of the market to look at other better investment options that they can cushion them from this.
All right, so we are told that for those looking to get lucrative positions, they are flocking into cement stocks. One stock today that stood out was Bamburi. We know there's a construction boom in Kenya. Will the construction sector perform better than the general index?
I believe for this quarter, the construction sector is actually going to be one of the best performing sectors. One, because, despite the fact that there's a lot of infrastructure going on, especially in terms of road infrastructure, and people, a lot of people looking for offices and residential buildings across the country in terms of looking for county business. There's a lot of regional expansion, especially when you're looking at the East African community integration, road network expansion, companies looking for offices around the region, especially in Southern Sudan, Rwanda, and Kampala. Bamburi and Earth River Mining are the key stocks to watch, given the fact that they have liquidity and there's a lot of foreign investor interest in them. But Portland has been a bit dormant because of lack of liquidity in the stock, so which makes it hard to get in and exit when one actually wants to. But the cement shares are the stocks to watch this quarter.
What about the energy stocks, Steve? We're told that, for instance, Total Kenya has lost a significant component of its market share as people look for diesel-generated energy. Now, we know that a lot of people are fuel importers, and that's essentially why we're seeing inflation ticking up so much, and also with the weakening shilling, it impacts on their affordability. What are we likely to see in this side of the market?
The energy sector, it's actually going to be one of the hardest hit sectors in terms of looking at terms of investing, because one, any gains that will have been made from being participating in this particular sector are going to be wiped away by high inflation, high cost of production, and also at the end of the day, I believe the issues of policy and politics affecting management of the industry. One of the reasons why people actually a bit reluctant to actually invest in, and people who had actually taken long-term positions are looking at cutting out the positions and coming out early so they can be able to save on the losses. And also many people are holding back the investment in the sector because they want to see exactly what is actually going to be the way forward. The budget was read with a few changes, so we're still waiting to see how it's actually going to affect the sector.
On the NSE today, some good performers are the agricultural processors, Kapchora, for instance. We've seen in recent weeks the tea companies like Sasini and Williamson's doing particularly well. How sustainable is that?
The silver lining about the weakening of the shilling against the dollar and other major currencies is actually a boon for agricultural sector, because at the end of the day, the ones are going to benefit a lot. But this is just short term. So that's why you're seeing agricultural shares doing very well yesterday and today. But I believe come next week or towards the end of this quarter, once the true effects of the declining shilling actually will be felt. So this is driven more through sentimental value other than any fundamental aspect to it.
Blue chip stocks, we know of Safaricom and some of the banks like KCB and Equity, but we've also seen some of the services companies and the media groups doing particularly well. Scan Group up 1.9%. Is this the sector that's going to be a buffer, as it were, against a market that's in decline?
An interesting thing is that today we saw a lot of exit in terms of foreign interest in KCB. One, because of there've been a lot of structure, management changes at the top that's affecting key departments. So many investors actually waiting to see the changes and how they're going to affect the performance of the company, which inadvertently will actually affect the performance of the stock. We're seeing Safaricom, it's actually being hit hard in terms of the weakening shilling, because at the end of the day, most of its transactions are in the foreign exchange, and in terms of when it's actually requesting for equipment that's supposed to run its network on. So Safaricom share is actually suffering a lot because of the weakening shilling. But when you look at the services industry, there's a middle balance in it. So I think a share like a Scan Group is actually going to be the buffer of actually what's going to happen, and it's going to be one of the stocks that's actually analysts are going to look at in terms of how the market is, which direction the market is actually going to take come next week.